What is going on, Z community? It's your boy TAMER Azizz, and today we're actually going to be going to part 2 of the livestock picking. Just a brief little overview of what we've done before. As you can see on the screen right now, we have our watch list. In the last live session, we actually decided that we're not going to be investing into any ETFs or put them on our watch list, which is why you see that it's been completely read out. Now, also what we also did is we added a bunch of different stocks to our actual watch list. So as you can see right over here, we have about 21 different stocks, and my goal is in this live session to break it down to about 5 to 6 different stocks that we could actually work with. If you guys want a little brief overview as to how I actually got all of these different types of stocks, I used a screener that's called Finviz. I'll show you guys how it looks like very briefly, but essentially this is a stock screener. What a stock screener is, it's basically, think of it as a way to filter out for different stocks that you're trying to look for. As you can see over here, you have the descriptive, the fundamental, and the technicals. The descriptive is just an actual description as to how you want to see the stock. As you can see, what country do you want it in, what price range do you want it in, dividend yields and things like that. Whereas fundamental is more for value pickers, I would say. As you can see, you've got your earnings per share, different metrics over there. You got your ad in the bottom right screen, get the hell ad there. And you also have your PDE ratios and all that good stuff. And last but not least, in terms of technicals, you could look for things such as the RSI, volume average, all that type of stuff is there within Finviz. I just wanted to show you guys that's how I actually get my stuff. And that's how I actually decided to add all of these different stocks onto the watch list. In terms of ETFs, just another brief overview. What I did over here is I only used these 3 filters, and I used ETF.com to help me figure out what exactly, if these ETFs fit my decision criteria or not. Honestly, otherwise, that is pretty much it. Let's actually get into breaking this watch list down. Alright, so as we've discussed before, the first decision criteria that we're going to look at is whether or not these stocks have a PDE ratio of less than 20. Now, in order for us to actually find this out, what we're going to be using is macro trends or even Yahoo Finance to just figure out if its current PE ratio is below 20 or not. So let's go ahead and open up Yahoo Finance. I'll just go to that quick shortcut. Of course, it's VFV, but completely ignore that for now. What I saw on our watch list over here was actually Oracle. What I'm going to do is we're going to put this watch list over here so we don't have to keep going back and forth, just for efficiency's sake and so I don't have to keep flipping through pages. So the first one that we're actually going to be looking at is Oracle, which is ticker symbol ORCL. Now we're going to look at it over here, and PDE ratio, where is that? Right over here, 17.94, which fits our decision criteria. What we're going to do in the watch list, I'll show you guys all the completed watch list of this factor afterwards. So for PDE ratio less than 20, I'm going to say yes. Next up we have Verizon, ticker symbol VZ. This is basically a telecommunications company within the States. Think of it as the Rogers or the Bell, but in the States. As you can see, PDE ratio is looking pretty nice at 12.56, which fits our decision criteria. So we're going to end up putting a yes under this decision criteria as well. Next up we have KMB. I want to see if there's a more efficient way to do this. Nah. I was going to try to see if you could right click and then open it up, but PDE ratio is also below 20. CPB, which is Campbell Soup Company. You know, if you're getting that chicken noodle soup, this is your guy basically. They got a PDE ratio less than 20. Let's do Clorox. For the pandemic, this thing went all the way up, but PDE ratio is also less than 20, so that's a good thing. IMOS, which is Chipmos Technologies Inc. Let's see what the PDE ratio is. Also less than 20, super dope. And then we've got MLI, is that? MLI, which is Mueller Industries. We've got it at a PDE ratio less than 20, sorry. So that's blessed. KTCC, which is Keytronic. These guys probably going to be less than 20, super dope. HWKN, Hawkins. We've got at less than a PDE ratio of 20, DIT. Amcon. Also, ooh, that's what I would consider to be a undervalued look. Like just by looking at that, like you see the PDE ratio, which is less than 10. That's already a solid one. With EPS, that's a oh man, we're gonna have to definitely look into that more. But Amcon is definitely a good one for what we're trying to look for. And then this one, we've got RJR, also below that. PDE ratio we're looking for. MEI, probably going to be less than that as well. I feel like all of these, okay, to verify, because I feel like all of these were applied, like I used the filter on FinViz to say PDE ratio less than 20, so I feel like all of these are. So what I'm going to do is I'm just going to skip all the way down to LOAN, which was the last stock on our watch list. If this is below 20 PE, then chances are all of them are. Okay. Okay, awesome. So all of them are below PDE ratios of 20, so we're going to apply that filter and say yes to all of them. And I'll show you guys a little updated watch list over here. All of them are below 20 PE. Now the next thing, we do have an average PE over 1 year to be less than 20 as well, but for these types of things where we have to calculate averages and whatnot, we're not going to look at this until after, because it is going to take a little bit of a while. I'd rather go through all of the quick stuff first because it just makes more sense. A dividend growth of over 20. Well, I want to see what the quickest one is over here. Okay, price to book ratio and current ratio. Price to book ratio less than 1.5. Okay, let's start off from the top and then go all the way to the bottom. Let's see. Okay, PDB ratio less than, okay, let's start off with Oracle. I hope that the PB is available on this general screen. It's not. Okay, so to actually find the PB ratio from Yahoo Finance, what you're going to do is just go to the statistics and then you're going to scroll down a little bit. You're going to end up finding that price to book, or PB is what they would like to call it. This one is way over, so we're definitely going to be putting a no for Oracle. Verizon, and bang, we've got a price to book of 3.33, still not where we want it to be, so that's a no. KMB, we've got a price to book of 71. I don't think so. Campbell Soup, probably going to be a high one too. Price to book of 5, still pretty low, but not what we're looking for in terms of price to book. CLX, the Clorox company, and we've got 20.03, still not where we want it to be at. IMOS, a price to book of 0.06. Interesting. Dope. So that's a yes for that one, a no for the others. And MLI, MLI, sorry. Dope. We've got price to book of 3.08, still not where we want it to be at. KTCC, we've got at a price to book of 0.68, nice. KTCC, big shout out. We'll put yes. Hawkins was it? HWAKN. So basically, guys, as you can kind of tell, it's just basically doing the same thing over and over again, where you're looking for a specific filter and you're going through every single stock on your watch list to see whether or not this fits your criteria. DIT fits that price to book below. RGR, dude, I don't know why. I don't know if it's just a Canadian thing or I'm just like, I don't know, I got some crazy accent going on, but every time I see a G or a J, I always just mix up and say the other one, if that makes any sense. I don't know if you guys are the same, but yeah. Hold up, guys, just give me a quick second. Sorry about that, my dudes. Okay, Vivo is not looking so good. NDO. We've got at price to book still too high. So that's pretty much it, guys. Like, that's literally what I do, but only for this specific factor, and chances are we're probably going to be doing this for the other ones too. And I feel like when it comes down to the averages and all that type of stuff, you'll find it to be really helpful because of the resource that I use in terms of like macro trends. Like, it simplifies everything, but this is just kind of like rinse and repeat type of techniques. And at the end, after we're done doing all of this, we're just going to compare and contrast with each and every single one. It'll hopefully give us like a more narrowed down path of what stocks we're gonna have to cut off of the list and whatnot. Okay, we've got DVD. DVD doesn't even have a price to book. I don't think that's a good thing. So we're gonna definitely skip that one. NPK. National Presto. Okay. 1.97. No, doesn't cut it. WLKP, and then one more after this one being loan, and that's pretty much it. We've got price to book of that, and then loan. Last but not least, bang, Manhattan, Bridge Capital. 1.79. So essentially, I'll show you guys the brief little updated watch list. What I did, so I don't really have to scroll down through anything, is I just kind of, yikes, I put it into the second category just to make it a little bit more easier, so I don't have to keep scrolling like left and right and stuff. But basically we got that, one more, and then boom. And then move this bad boy over to I'm gonna move that over to PDB. Bang. Now I want you guys to look at this. PDB less than 5. We only have 1, 2, 3, 4. Only 4 ones that actually pass this, which is very interesting. Okay, let's move over to the PE times the PB being less than 22.5. Now, this one is, it kind of sucks how we didn't actually write them here, but essentially we can make some sort of guess, right? Because if you think about it like this, if the PB is less than 1.5 and we have that under yes, and then the PE is less than 20, which all of them are in this situation, then we would just make a brief little calculation. So if we were going to say a PB of less than 1.5, worst case scenario is that, and worst case scenario for PDE is that. So automatically we see that they have to be less than that amount. You know what? We'll come back to that afterwards. We'll just go through all the PEs and PBs, but essentially what you want to do for this factor, in case we don't get to it, is you want to multiply the PE ratio by the price to book. If it's less than 22.5, then you basically mark it down as a yes. And if it's more than 22.5, you mark it down as a low. Now over here, we've got a current ratio of higher than 2. Basically what a current ratio is, and I think I've kind of explained it before, is basically you're taking the current assets over the current debt. This will basically tell you how insured the company is in case anything really goes down terribly, such as a market crash. How much of their assets will they be able to cover their liabilities, such as debt or even like business expenses overall. If you have more questions on that, just let me know and I'll try to clarify that a little bit more. Now, in order to find this current ratio, I highly doubt that they'll actually tell us here on Yahoo Finance, but just in case, let's see what we got here. Current ratio. Oh, okay, sick. So we've got them on Yahoo Finance. We also even have the how many shares are held by institutions here as well. So this can actually knock 2 birds in 1 stone essentially. So let's kind of do both of them at the same time. So first things first, we're going to be doing Oracle as usual. And we are going to say, wait, first just make sure we're at Oracle. Dope, okay. Current ratio is 2.16, so that's a good thing. We're going to be putting a yes for Oracle. And CR, just so I know that it's a thing. And we might as well look at this percentage held by institutions, which is 48%. It's basically, that's a good thing, because what we're looking for is anything less than 60%. Because usually what this means, if you have more than 60% of shares held by institutions, that means they've really got a majority of what the price is going to be looking like. Institutions are just talking about investment firms and things of that nature. So essentially anything higher than 60%, if these institutions decide that they want to pull out their money, stock price is going all the way down. Again, if you have questions about that, then give me a shout and I'll clarify that as well. So we've got that going down. Verizon now. Okay, shares held by institutions, yikes, 68%. That's not a good thing. Current ratio, 1.02, which is a good thing. All right, next up, we're going to be doing KMB. Kimberly-Clark. Shares held by institutions, 75%, not a good thing, so that's a no for that. And current ratio is actually good, with less than even 1. Oh wait, current ratio is not a good thing because it's less than 2, so that's a bad thing. So I was just looking through if I actually put the right information for Verizon or not, and it turns out that I didn't for Verizon in terms of current ratio. It should have been a no rather than a yes. So let me clarify that one more time. If the current ratio is higher than 2, good. If it's lower than 2, bad. Just so I didn't confuse any of you guys over there. So let's move over to the next one, which is Campbell. Current ratio less than, okay, we've already established that. And then held by institutions, so that's a no and a yes. No for current ratio and a yes for held by institution percentage. Clorox. Okay, both of them are a no in terms of Clorox. Current ratio less than 2 and more than 60% held by institutions, basically. So it's not a good thing. Held by institutions, wow. IMOS, literally less than 10%. Interesting. Cool. And current ratio, sorry, was that 2.220. So that's actually a yes on both ends. Super good stuff. IMOS, I honestly feel like I haven't done too much research onto the company itself. That's what we're doing right now. But I feel like IMOS is going to be one potential prospect that we're going to be looking at. MLI current ratio is good, and shares held by institutions, terrible. So yes and no. KTCC. Keytronic is okay, good on both ends for Keytronics, good stuff. Hawkins, bang. Current ratio is good, and shares held by institutions is bad. So yes and no. Next up, we've got DIT. Held by institutions, 10.9, not bad. And current ratio is over 2, so that's a good thing. So it's a yes on both ends. Bang and bang. RGR. I was about to say RJR, but I stopped myself. Don't even worry about that, guys. Alright, held by institutions is bad, current ratios is good. MEI. Held by institutions is shit. Dude, I even forgot what I said for MEI. Okay, held by institutions over, and that is good. MEI, blessed, essentially. Hold up. MEI. Current ratio, good. Institution, bad. Like, dude. Current ratio, yes. And held by institutions, no. RGR. Let me just look back at that again. Jeez, okay. What's going on, Usama? Long time no see, man. I hope you get some value from this little live session. Get to learn how to pick some stocks, know about some specific metrics as to what to look at, just to make sure that portfolio's looking D's. Do you feel me? Also, Usama, let me know if you have any questions, man. I'm like more than happy to clarify that. If I mention anything that just doesn't make sense or you want more clarification for it, I'm more than happy to help out, my dude. Blah, blah, blah. Held by institutions, that's terrible. 103%. Alright, that's a big no for Vivo, but a yes for the current ratio because it is over 2. MNDO. Shares held by institutions, pretty good, and current ratio is also pretty good. So that's a yes on both ends of the spectrum. EBF. Okay, held by institutions, bad. Current ratio, good. So that's a yes, no. Yes and a no. CRWS now is up next. Crown Crafts. We've got current ratios looking good, but held by institutions is also looking good. So that is a yes on both situations. All right, TRQ. Held by institutions, less, and okay, that's actually 2 in a row. That's actually been on a good side. DVD while I update those bad boys. Yes and yes. Dude, don't even tell me you're what's going on with that. True. Dude, I said DVD, didn't I? Bro, Yahoo Finance is tripping. That's gonna make me go back all the way again. Nice. Go to the statistics, my guy. Alright, shares held by institutions, good. Current ratio, also good. Wow, that's 3 in a row, boys. NPK. Jeez, what's going on, Aiden? My dude, I haven't seen you in a minute, man. But essentially, what we're doing, what sectors am I looking at? In terms of sectors, there isn't really a specific sector that we're looking at. What we basically did in part 1 of the session, you could refer to it on the channel, is essentially we used the stock screener and we basically applied some basic filters that brought us down from around 8,000 stocks to about 26 from what I recall. I also had some picks in here as well from something I had from my old watch lists, so I also put them in here. So to answer your question, no specific sectors that we're looking in, just something that's undervalued and would make a really good long-term investment is what we're looking for here. Yes and no. WLKP. Okay, one more after WLKP, which is loan. Shares held by institutions. 46 at 6.2. Okay, WLKP is looking pretty solid, and then last but not least, it's going to be the loan. Current ratio is looking a little bit too fantastic with 104. Wow. Okay, true. And shares held by institutions is pretty darn low, so not bad actually. So that's a yes and that's a yes. Now let me copy and paste all of this into the correct sections and I'll show you guys where we're at in terms of that. Current ratio is higher than blah, blah, blah. Solid and institutions. All right, so check this out. This is the updated list that I've been going through while updating that. So as you can see, we've got some things going on. What I'll even do to make this a little easier to look at is I'll do some conditional formatting. I'll add a rule that basically says to highlight anything that says yes into green. What I'll do is select the data range. Yo, if you guys don't know too much about Excel, I just made your life like 20 times more easier. Format cells if the text contains yes. And thank goodness we don't have any tickers that are ticker symbol yes. Okay. If the text contains yes. Okay. Dope. Hopefully that makes things a little bit more easier to look at now. You can kind of like get an idea as to what has been qualifying so far and what hasn't qualified. So next up, we are not going to do the PB/PE ratio until later on. What we're actually going to be looking at, and this is one of my favorite things, is looking at the actual dividend growth. Oh, actually, let's do the EPS. Let's do the EPS growth. Now, when it comes down to EPS growth, let me just set it up on the other watch list that I have over here. EPS growth. Just give me a second because this will... Okay. EPS growth of 10% per year over the past 10 years. And we're also going to see if it has done any sharp increases or sharp decreases, because that raises a huge red flag right away. Obviously, because of the pandemic and stuff, maybe we'll be a little bit more lenient on that. But actually, you know what? I'll also even add EPS growth over the past 4 quarters. Might as well, right? All right, awesome. So what I'm going to be using to actually look at all of these statistics is I'm going to be using the resource that I was showing you guys in part 1, which is macro trends. Now, essentially what macro trends is, you could look at a bunch of historical data for individual companies. So any stock, you basically put the ticker into here and boom, you get everything that you need when it comes to history. Now, first things first, let's look into Oracle. Hopefully it'll give us an idea as to what its past earnings per share has been looking like. Sometimes they do summaries like this, but let's be real, we're looking over the past 10 years. We're not looking at the past year like the summary, where you know what I mean? So as you could see, we scroll down over here on macro trends. You guys are looking at it. Okay, I'll just have to make sure. Now this is essentially telling you on a span of the maximum, and you could obviously switch this to whatever you like, 5 years, 3 years, 2 years, whatever the case may be. And it's showing you everything you need to know about EPS. It's showing you for the past 12 months, the quarterlies, and it's even showing you year over year quarterly growth. Now, because we're looking over the past 10 years, it's 2021, so we're going to be looking back to about 2011. So we could even filter it out over here, make our lives a lot easier, right? Make this to like January the 1st, because, you know, and then maybe even make it till right now, because why not? Boom, it gives you a nice little summary, even with the filter on it. What else? Okay, so over the past 12 months, which is essentially the past 4 quarters, has Oracle been seeing earnings growth? Now, just by looking at the chart over here, you can see that it was kind of steadily going up. Oh, wait. Oh, dude, we're looking at the past 4 quarters. That's only these bad boys. So, okay, past 4 quarters, you're looking at these past 4 data points. 1, 2, 3, and 4. This means the most recent quarter, it's did earning per share of 1.68. The quarter before that was 0.8, 0.72, 0.97. Now, this already tells me a couple of things right off the top of just looking at this. Number one, there's a sharp increase. Sharp increase in the fact where over the past 12 months, it literally just was at 80 cents and then it went up to 1.68. Like, what's up with that, right? Over the past 4 months, has there been growth? Over the past 4 quarters, has there been growth? I would say yes, but again, it does not look very consistent to me at all. It was at 0.97, then 0.72, then 0.80, and then all of a sudden at 1.68. I'm not really seeing the consistency there. So for EPS growth, I'm gonna have to go with a no. Make a well-informed decision as to how this is actually looking like right now. Sharp EPS or decrease or increase. Now over here, we're looking at all of this data over the past 10 years, okay? From 2010 in November all the way till today. Now, it has been consistently kind of growing, as you can see. Keeps going up. But then out of nowhere, 2015, it kind of slowed down a little bit. Which is okay, you know, sometimes there are corrections, whatever. And then after that, it starts picking back up. But then boom, 2017, out of nowhere. Big fall for about 4 quarters. And then after that, it just randomly picked up again. And it just kept increasing. I would have to say... not looking too good. This is a sharp decrease, and that's not something that I'm looking for. So when it comes down to sharp increases or decreases, even with that last data point too, if you can notice, literally that last data point at the trailing 12 months, there is another sharp increase, and that's not really something that I would say is a reliable source. So I'm going to put a no for that. Now, EPS growth over the past 10 years, we're already looking at that. But they're asking me now, or sorry, my factor little thing is 10% per year. Is there somewhere that will tell me this? What I'm trying to look for right over here is if there's a way where it'll tell me like it'll tell me year over year quarterly growth, but I'm trying to get like an average on these data points instead. Let's see. Let's try to look at the financials. Maybe it might be there. If not, we'll just go back to that page and see where we're at. Yeah, no, this is just gonna show me literally the like financial sheets. I'm not trying to look at that right now. Maybe in the key financial ratios. Yeah, I think it's best if we go back to that EPS sheet that we were looking at. It just makes more sense. Jeez, alright Osama, no problem, man. Tune in whenever you want. We're probably going to be going until around 3. Just because there's a lot of different stocks we have to go through and a lot of different filters. But again, man, tune in whenever you want. Chances are I'm going to be posting this on YouTube anyways afterwards. So even if you miss out on something, you could still kind of get back up to speed. Okay, EPS growth over the past 10 years. Now, this is showing me year over year quarterly growth. But it's only showing me in terms of quarters, and I'm not really a fan of that. But I'm pretty sure this chart over here was showing me the annual EPSs. And honestly, I think based off of here, I can calculate an average off of this. So let's look at the... Man, I want you guys to see how I'm going to do this calculation, but you know what? Always came in handy, I'm not going to lie to you. Shout out to University, because if it wasn't for that, I wouldn't have a calculator in house. Alright, 3.08 plus 2.97. Now keep in mind, this is only showing me data for 2020, so we're going to track back to 2010 only. 0.85 2.24 plus 2.07 plus 2.21 plus 2.38 plus 2.26 plus 1.96 and then past 10 years. So we got an average of 2.3 of an EPS, but that doesn't really tell us the growth. I'm just taking this in kind of right now, but let's see. Quarterly EPS. So you know what we're going to do then? We're going to actually put in a little formula into the Excel spreadsheet. Let me put in the formulas first, and then after that I'll kind of give you guys how we're gonna do this. So 3.08, 2.97, 0.85, 2.24, 2.07, 2.21, 2.38, 2.26, 1.96, 1.67, and then last but not least 1.21. All right, now I want you guys to actually look at what I'm about to do right now real quick. So see over here, these are the data points of the EPS for the past 10 years. I'm gonna relocate it over here after we get rid of this bad boy. Hide these, get out of my face. We don't want no ETFs anymore, and even cancel that one because why not? So we're gonna put 2020, and then we are going to add a nice little formula for this, -1, and we're basically gonna drag this down until we get to 2010. One more, and there we go. Copy and paste the data that we had. So now we have the years, the EPS, annual, and then from here we could actually calculate the growth. So to calculate the growth, essentially what we're going to be doing is we're going to be subtracting this amount by this amount. That's going to give us the difference. But in order to actually calculate the percent change, then we're going to actually divide it by that same data point, 1.21. This will actually give us the percent change from year to year, essentially. So essentially, just to make sure and double check that our calculation was right, 1.67 minus 1.21 divided by 1.21, it's about a 38% change, which is a good thing. Now let's see if we drag this over to here. And then from here, we calculate average growth over the past 10 years, because obviously you're not going to get something that's consistently getting that same 10% return, essentially. So we're going to average out all of these data points and then see what number we end up getting. 26.18%, meaning that Oracle will fit our criteria for this little metric. I know that was a lot, but since we actually set up the formulas and we set up all of that now, it's going to be a lot more simpler, because all I have to do now is literally just change the EPSs, and that's literally it. So let's go about doing that now to the next stock within our watch list, which is going to be search for a ticker symbol and Dude, I told you guys about this before, but I recently got the this new setup, and like just managing around it or like navigating around all of the different screens just has me on a different level. Like I try to literally move my cursor to another screen and it's like, no, you have to go this way first. I'm like, bro, like just bless me, man. First world problems for real, right? All right, so now we're on the Verizon EPS. Sorry about that little rant. And basically, we're going to do the exact same thing when it comes down to the EPSs. And again, because they only give us the 2020 data point, 2021's not over yet, we're just going to input everything. 4.3, 4.65, 3.76, 7.36. I can already see a bunch of inconsistencies here with the Verizon. 4.37, 2.42. $4, 0.31. You guys are seeing this too, right? I already have a feeling it's not going to be a thing. And last but not least, 0.9. Alright, so check this out. And I want you guys to tell me what you guys think. These are all of Verizon's numbers. As you can see, a bunch of inconsistencies here. Like 1 year it'll be negative and then the other it'll be positive. And like, come on, dude, a 1000% growth in earnings? What can I say? Anyways, average growth turns out to be 123.23%, and realistically, because it does fit this criteria, we're gonna have to just say yes to Verizon. But I know that when it comes down to its other factors, such as the sharp increases or decreases, it's not gonna be looking too well. So let's look at that. Look, as I've already said, like this is just looking over the past 4 quarters right here. Okay. do we see any earnings growth? I'll be honest with you, no, because number one, 4 quarters ago, 4.61, then it decreased to 4.41, and then decreased to 4.3, and then now it's trying to recover again. So overall, it's really been on a decreasing. It's been on a decline in terms of EPS. So we're gonna say no for the past 4 quarters. Now over the past 10 years, I'd say, have we been seeing sharp increases or decreases? I don't even have to answer that. You just look at the chart and you're like, nah, like this is too messy. So we're straight up going to have to say no for Verizon. Let's look up for Kimberly-Clark. Let's see what that's looking like. Okay. So as per usual, we're gonna do this annual EPS calculation. I'll fill in the numbers real quick and then I'll let you guys know what ends up resulting. Honestly, for those of you watching, let me know if you guys want me to continue going through this process or you just want me to skip to another factor, because I don't want to end up wasting your guys' time. If you guys want me to touch up on another factor, like let me know and I could just do all of this after on my own time. Just because I want to make sure you guys are getting value and you guys are knowing like the step-by-step process as to how I actually do all of these calculations, the formulas required, and then just how to set up your Excel sheet overall. So let me know. So as you can see, these are all the numbers from Kimberly-Clark. You know, there's still that inconsistency where it's like negative, positive, positive, negative, negative, positive, positive, negative, positive, positive. It's like some sort of pattern you're going with, but it gives you a conservative average growth of 11.2. So for Kimberly-Clark, we're actually going to be putting a yes on that one. Yeah, so let's end up going to actually analyze the chart of its past earnings. Sharp EPS increases or decreases. We see a big one over here, which was when? 2014. You could basically say because of the little correction that happened in 2015, but you know what? We're trying to look for a company that will be able to withstand these types of scenarios. So we're definitely not going to go with that. Even over here, like a huge decrease in the 2017s. This is just not something I really look like. Maybe if we were looking at this back in like the 2012s and stuff, maybe I'd say, yeah, Kimberly-Clark is a nice one, but we're going to have to say no in terms of that. So I'm just going to change the wording, because for sharp EPS increases or decreases, like no means that there was an increase or decrease. EPS growth over the past 4 quarters for Kimberly-Clark. We could see over here over the past 12 months, there hasn't really been any growth. There's actually been a decrease. You look at number one over here, and nah. 7.4, 6.88. Even if we're looking at the actual quarterly ones, it's not really a thing. 1.99 and then 1.38, but then it begins to recover again. It just doesn't really look that stable at all. So we're going to have to say, you know what? Yeah, we're going to have to say no. That's the thing, guys, because we're working with 21 different stocks, like we do have to be a lot more pickier than usual. So always keep that in mind, especially you want to be very picky when it comes down to investing in individual stocks, because at the end of the day, by doing that, you're protecting your money, right? So you want to make sure that that's the thing. This is Kimberly-Clark over here. We're going to obviously scroll down to the table. I'm going to switch up these numbers a little bit, and then we're going to calculate its average growth. So 5.36, 0.7, 0.86. You can already see like the inconsistencies with all of these companies, man, and it really boils down to how their accountants or how their finance team is really handling this. Usually a lot of these big companies like to just do funny business, right? That's one thing you got to really watch out for, but really it's inevitable within what their operations look like. But just wanted to add that as a little note. 1.44, 2.41, 2.42, 2.42 again. So you guys probably believe me, but after putting in all of the numbers, it came out to an average growth growth of 64.89%. So that's going to be a yes for Kimberly Clark. But moving up over here to the actual chart itself, on a quarterly basis, you're going to look at over here. Sorry, let me just double check something real quick. I'm just trying to confirm something in terms of the Campbell soup. I want to see if something super crazy happened in the beginning of 2018, just in case. Or sorry, yeah, Campbell soup, yeah, Campbell soup 2018. Because the thing is, it's been stable. You can kind of tell that there has been stability in its earnings and whatnot. That's the thing. I want to see what was the main factor that made it go down in 2018. But my computer's running slow, so I might have to pull up the phone real quick. Okay, yeah, so basically it was just its sales that really went down in 2018. Nothing really specifically, but... Interesting. It was just nice to know that. It's really good to know as to why these things kind of go down from time to time. Sharp EPS increase or decrease. We're going to have to say yeah, because as you can see, let me just point that out instead of using my finger because you guys aren't going to see that. But as you can see, number one, this just stands out to you. In 2020 of January, like this thing just shot up from 0.55 to 3.97. Like, dude, that makes absolutely no sense. And even over here, you see these inconsistencies going from 0.57 to negative 0.5. These types of inconsistencies are something that we do not tolerate from any company, which is not acceptable. And over here, in terms of earnings growth over the past 4 quarters, it's inconsistent. So again, we're going to have to say no. We're looking for something, and I know it's the pandemic, companies are struggling, but again, you're trying to look for a company that can withstand these and still end up profiting from these types of bad situations. Next up, let's look at Clorox. I'm already liking the look of that. But let's calculate their average EPSs first, and then I'll show you what that's looking like. 7.36, 6.32, 6.26, 5.33, 4.92, 4.37. Yeah, see, when it came down to Clorox and how it handled the pandemic, it was very interesting. Because rather than decreasing like a bunch of these other companies, it actually kind of increased, or it kind of held its ground. And I feel like it was because people were like, oh yeah, sanitize this, sanitize that, cleaning this, cleaning that. So it makes sense, but again, you do have to keep these things in mind as to why a specific company withstood a certain situation. Maybe they had capital reserves, which is something that we'll kind of look into a little bit more. But yeah, these are good things to really keep in mind. 4.24. Ooh, you guys aren't gonna like the looks of this. Average growth for Clorox is actually 5.92%. Not something that we can really tolerate, is it? So we're gonna have to put a no for average growth for Clorox. Sharp increases or decreases. Let's look at the charts. As you can see, looking at this quarterly over the past 10 years, yeah, it kind of goes up and down. Like, there are some swings, right? But are there sharp decreases? No, it's kind of gradual. There was one over here in 2010 when it just went from 1.52 to 0.15. And then it kind of just kept going up and down, up and down, up and down. Started gaining some stability, and then boom, that happened. Definitely, this is what I was talking about in terms of the pandemic. Earnings just shot up. But then again, you could see that it's now beginning to consolidate at that normal point that it was at before, more or less. So I'm going to have to put... we'll put a sharp increase or decrease because Well, actually, you know what? I won't put a sharp increase or decrease, and I'll tell you why. Um, if you can justify that if you can justify that sharp increase or decrease, then I would say you can leave some room for not being too harsh on your judgment. So for that, we're gonna end up putting a yes. Yes, meaning that there aren't any increases or decreases, just to clarify that and get that out of the way. EPS growth over the past 4 quarters, as you can see, it just shot up. But again, because it was influenced by the pandemic, I'll still give it a no, because it was an external factor that we can't really like depend on. It's not a value data point that we could depend on. Even if you look at the past 4 quarters before those 4 quarters, it's like it was just kind of flat. Like, despite this little data point at 1.86, it was relatively flat and it was just averaged out. So let's move on to IMOS. Oh, nice, Omar. Thanks a lot, man. I really appreciate it, and that you're getting value from this little filtering live session. If you have any questions, man, like, please give me a shout about anything that we're talking about, whether it's EPS, like P to E ratios, P to B ratios, current ratios. Just give me a shout in the chat, and I'll be more than happy to clarify stuff for you, man. All right, so for IMOS, let's calculate this average growth of EPS. 2.3, 2.28, 1.06, 5.7. Yo, okay, the reason I'm saying that is because I'm looking at the earnings per share for IMOS in 2015, and that thing was at 26.16%. Huge outlier there, and that's not something that we could really tolerate. I'll still calculate it just in case, so we get an idea of where it's looking at, but just wanted to point that out. Yeah, see, so that huge data point over there, that 26.16, really messed things up a little bit. So what we can do is actually look at the average of everything other than that one data point. So like 1.75, right? So then we could substitute 1.75 into here and then see what that growth would look like. Yeah, still a little bit too much, right? So for that, we're gonna have to put that's the thing, right? It's still, because if you technically think about it, it still did do more than 10% per year over the past 10 years, but it is a little bit sketch. I'll put a yes, but instead of highlighting it in green, I'll actually highlight it in yellow to point out that there might be some digging deep that I'll have to do. Or sorry, not even that. I'll just bold it because it's not letting me highlight it due to the conditional formatting. Let's look at the charts. Ooh. Yeah, see that 26.6 really, like, it doesn't really let you see things clearly, right? Yeah, man, like that was just on another level at 26. But even then, if we kind of zoom out a little bit, or zoom in a little bit, sorry, into the 3-year, you could still see that the company is like, that's weird. Huge, and then just a huge drop, and then boom, 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 boom. It kind of looks like it's struggling to profit almost, but then it starts growing it again, right? Definitely something that'll require a lot more research into, but are there sharp increases and decreases? You're gonna have to say yeah. Because that just, for it to shoot up to 26 doesn't make any sense. Over the past 4 quarters, what's that been looking like? 1.2, 0.52, 0.46. Inconsistent, so we're gonna have to say no. Damn. Okay, I'm a lie. See, once you actually start looking at like the in-depths of these companies, yeah, sure, your PE ratio might be looking amazing, your current ratio might be looking great, but once you start looking at the earnings, and you'll even see once we start looking at the financials, you'll notice that these companies aren't really that sick, or they're not really reliable. I'm not gonna say they're not that sick, but not really reliable long-term investments. Right now I'm just checking out this one. 1.79, 1.82. I'm just calculating the average growth for this one in terms of EPS. 1.74, 1.54. See, I never really took in that these live sessions would be a lot longer than expected, but you know what, at the end of the day, this has been something on my to-do list for like the past, I don't even know, like for the past month or two. So I'm like, okay, rather than me doing this by myself, why don't I just let you guys in and see how that's actually looking like? Because at the end of the day, it's not only going to be making my watch list, but it's also going to be showing you guys what my thought process is in terms of how I pick these stocks and the factors that I use and so on and so forth. EPS growth, I'd say, is there, right? 0.5, 0.76, 0.64, and then boom. Not bad, right? So we're going to have to say yeah for that, for MLI. Sharp increases and decreases. You guys tell me. Boom. That's 1. That's 2. That is 3. So we're going to have to put a no. KTCC. Let's see what's next. Keytronic. Yeah, you better load KTCC. We're going to scroll down for that one. Yo, guys, honestly, in the meantime, if you have questions or you just have, like, just anything, like, even if it doesn't have to do with what I'm doing right now, like, just let me know and I'm more than happy to answer you guys. Might as well, rather than just having me type in all these numbers in and be like, okay, what's the next step, man? 0.38, 0.67, 1.12, 1.07, 0.55, and 0.85. Average growth 25.47%, but the thing is I'm seeing some negative numbers in there, hinting to some sharp decreases already. But you know what, for the sake of the actual factor itself, for KTCC, we're going to be putting a yes for EPS over 10% per year in terms of annual growth. And then we're going to look at the chart real quick and see. Yeah, that was exactly what I was seeing. Sharp EPS decrease. Another essentially sharp EPS decrease. Sharp increase. And another sharp increase here. Not something we're looking for. So we're going to have to say doesn't qualify. How about over the past 4 months though? You could see 0.08, 0.08, 0.14, 0.16. There is some growth there. So that is something that we could potentially look into if it looks good in terms of the other criteria. Next up is Hawkins. And we'll fill that in. 1.33, 1.14, negative 0.43, 1.07, 0.86, 0.91, 0.86, 0.81, 1.09, yikes, 0.98, and last but not least 1.16. Average growth of negative 48%, nope, doesn't qualify you, boy. And you could already tell sharp EPS increase, bang. That these types of things really mess companies up. But if it wasn't for these two, like I think honestly things would have been looking a lot better, and this would have qualified in terms of no increases or decreases. How about over the past 4 quarters? You see 0.22, 0.56, 0.58, and then boom, 0.38. Close, but not close enough. DIT. Oh no, did it end up clicking on Credit Suisse? I have a feeling it did. Hawkins, we're still at Hawkins. Dude, just load up for the Mandem, man. Yeah, so I thought things would be a lot better with this laptop, considering that it has some pretty good specs, but man, this thing's breathing super hard. It's like it has coronavirus or something. Like, dude, it's not that serious, man. DIT isn't even popping up. That's surprising to me. That's really surprising to me. So let's just skip over to RGR. I don't know what's up with that, to be honest. DIT's not showing us anything. So I'll just put a little dash to signify that there was nothing there. Or to indicate that there was nothing there. RGR. Let's calculate that EPS growth over the past 10 years. 5.09, 1.82. Already you could tell sharp increases and just inconsistencies already. Just by looking at the chart, right? Because if you're not seeing that something that's at least like steadily increasing or around the same range, then you already know that that can be a big red flag. Yeah, super inconsistent. But you know what? The average growth is there. It's at 31.82, but I highly doubt that it is going to pass the other two factors. Just by looking at literally the chart or little table, as you can see. Yeah, boom. Not looking too good. Over here was going well in between like the 2008s all the way until the 2014s. But of course, because of the market crash or like the correction you can call it in the 2015s, there was some inconsistency there. Other than that, like man, not really a good thing at all. But you know what, I'll give it to them because their quarterly has been steadily increasing, and that's something that we really like to see in companies. 100%. So we're going to be putting a sharp increases are there, but you know what, the past 4 quarters were looking pretty good. Next up is MEI. Method Electronics. Scroll all the way down, bang bang bang, and 3.26, 2.43, 1.52, 2.48, 2.2, 2.57, 2.51, 1.08, 0.22, 0.52, 0.37. Okay, average growth is there. We've got 56%, so that is a yes in terms of MEI. But now what's the charts looking like? We got some stability after that 2013 mark, but again, huge EPS decreases and huge EPS increase over here. Another random decrease here, an increase there. It's like, no, there's the consistency isn't there, man. So we're gonna have to say a no in terms of decreases. But over the past 4 quarters, you can also see that there isn't really a certain trend going on. It's neither decreasing or increasing. It's kind of just repeating some next pattern. So that's a no on MEI. Vivo. Shout out to my guy Vivo, yo. Or no, I don't know if you guys ever, I don't know if you guys can relate, but back in the day when men's were not trying to pay for like a music, what's it called, like a music thing, like Apple Music, Spotify, you know exactly what I mean. Or even before those things existed, what I would do is basically go on to like YouTube on Vivo and like literally just listen to tracks from there. Like it was kind of funny, I'm not gonna lie. Like every artist had a Vivo to them associated. It was pretty cool. But yeah, I don't know if you guys can relate with that or not, but just thought I'd throw it out there with the ticker symbol looking like that and whatnot. Average growth of 8.63 does not pass our criteria, so that is going to be a no. What really messed it up was that last data point where 2010 and 2011 really had the same EPS. Not something we're looking nice to. Or not something that does look nice. But as you can see, the stability is there, but this kind of troubles me because over the past 10 years, how are you telling me that the company is still failing to get over that 0.2 mark? Or like, as you could kind of see that average point of like 0.2. And then, whoa, out of nowhere, you magically go over to like these 2 points. Not really consistent. So average over the year, sharp increases are definitely there. Those last 2 data points. And over the past 4 quarters, no real trend is going on there. So that's going to be a no for me. MNDO is up next. Okay, we could already look at this right now. You guys can see sharp decreases are there. Last 4 quarters, like if this is becoming, I think if this is becoming a little bit more of common, or not common sense, but it's kind of becoming like a second sense now, where you could literally just look at charts and just kind of see, okay, no, this, that. It's something that like with practice, it starts becoming second nature. So I could already tell you right now, MNDO does not go under the sharp increases or decreases because they're there. But in terms of EPS growth for the past 4 quarters, it was there. As you guys kind of saw, there was like very subtle increases, but nothing too significant. I'm still gonna say a yes for that. On the other hand, let's actually calculate the average EPS. Ooh, okay. Average growth isn't there either. It's at 8%. So that's gonna be a no for MNDO. EBF is up next. Yeah, actually, no. You know what? I want you guys to take like a little quick look at the chart again in terms of the quarterly, the one in the middle over here, and I want you guys to see if you could start realizing these trends. With the huge peaks, those really kind of raising those red flags. That tells you, okay, there's a sharp increase here, sharp decrease there. Not really a good thing. And then you could literally just look at the past 4 data points for this stock, and it's like, nah, not a thing. 0. 0.6, 0. 0.7, 0. 0.7, 0. 0.7. What's going on? You know what I mean? Like, those are the types of questions that you really need to ask yourself. But anyways, let's move on to EBF. And I want to see, I'm not even going to say anything in terms of the last two factors. I want you guys to figure it out. So what I'm going to do is I'm going to keep it over here, and I want you guys to tell me what you guys think in terms of the sharp EPS increase or decrease along with the past 4 quarters. So take a look at it and let me know what you guys think. I'll give you guys a couple of minutes while I do the average, like the EPS average over the past 10 years. Man, my throat's beginning to get super dry because a man has not eaten or drank anything because I'm fasting. So my throat's on a whole other level, yo. So yeah, excuse me if you guys feel like I'm a little bit on the low energy side. It's literally just because of that. Guys, have you had the chance to kind of see that chart and make some sort of quick hypothesis, or are you guys still figuring it out? I'm almost done. True. My formula is just messed up. That's really cute. Yikes. Alright, I've given you guys a couple of minutes to look at the charts, but as you can see, there's a sharp EPS decrease, and another decrease. 4 peaks. It's number 1, number 2, number 3, number 4. Not something reliable. And in terms of the past 4 quarters, there is a little sharp decrease, but then it starts to increase again. So that's a green thing. That's a good thing, sorry. And these ones are a bad thing because of the sharp decreases. I actually ended up doing a calculation for the average, and it turns out that It's at an average growth of 108%. There have been some inconsistencies, as you've seen, because of that those sharp decreases on the chart that you guys were just looking at, but not really our thing. So we're gonna put a yes to the average. Sorry, we're gonna put a yes to the past 4 quarters. We are going to say this doesn't pass the increase decrease test, and average growth, it unfortunately does. I say unfortunately because I don't really like considering things like this to be good picks, but something there. I want you guys to keep in mind that, like, when it comes down to EPS and why we're spending so much time on this is because the earnings per share is probably one of the biggest and most important things to evaluating a company's success, because the earnings per share is basically what it's showing you. It's showing you the profits of a company essentially and how it looks like in comparison with the amount of shares that are available overall. Okay. Quarterly, not growing, not really a trend going on there, so it's definitely a no-go. And yeah, you got the 2 big decreases, so it's like, why are you doing this for? So it's a no and a yes, or sorry, a no and a no. It's a double no. Hopefully it's not a triple no when I calculate this average growth. But I can already take a nice little guess that probably not going to pass the EPS growth test. Actually, you know, it might, because all of these numbers are looking pretty close to each other. We'll see. Because right now I'm still at a negative amount, so hopefully these last 2 data points will really change things up. No, it went a little bit more up, but it's only at an average growth of 3.73%. Not really something that we're looking for. So that doesn't pass any of those tests. Next up is TRQ, Turquoise Hill Resources. Whoa. Whoa. Okay, dude, I don't even know if I can consider this a thing in the first place. Yeah, sure, it's got those, like, the past 4 quarters of EPS has been pretty good, right? But this just makes my stomach a little queasy. But you know what? Fair game. What is that? You gotta show quality to all stocks, right? So we're gonna have to say yes in terms of EPS for the past 4 quarters, a no for all of these increases and decreases that just came out of nowhere. Let's actually calculate the average EPS over the past 12 or 10 years. Yeah, no, man. This is looking terrible. I'm just being straight up. But you know what? I don't blame these guys, and that's why I always have that thing where it's like, I'm always gonna be fair to stocks, because realistically speaking, you're still a startup company, or you're a company that's still kind of in the game, still kind of fresh in the game. Like, businesses are gonna be in the negative for a bit, you know what I mean? And that's why I don't judge it too hard, because it seems that it went public in 2005, giving it about 15 years in the game. You know what? Like, I think that's still pretty good, because I'd say about 10 years in, that's when they started being profitable. There is still potential, but again, this 2019 mark, probably because of COVID, it went decreased, but picked up back again in 2020. That's why the thing is, you always have to be super equitable when it comes down to picking your stocks, and don't be too harsh, but again, you do follow the filters that you set up for yourself. In the meantime, let's look at DVD. Oh, whoa. This is looking like some piano tile game, man. Nah. I don't know what is going on there. Don't even ask me. Is it worth even calculating the EPS? Of course it is, because we are equal to all stocks. We're not leaving nobody out. 0.23, 0.10, 0.14, 0.09, 0.05, 0.12, negative 0.25. Average growth of 0.1%. Yeah, that's a no. Decreases, no. And what's the last 4 quarters? Definitely not a flex. DVD is out of the question. All right, guys, we only have 3 more stocks left until we move over to the next factor. So hang on tight. I honestly feel like we might even have to do a third part of this live session, just because I didn't really expect it to go this long. Past 4 quarters looking pretty good, so we're gonna have to put a yes for that. What else? These little sharp increases are not really attractive at all, so we're gonna have to put a no. Let's look at the average and see. I also wanted to say something, ZCommunity. So essentially, if you are not watching this live and you are actually watching it when it gets posted up on the YouTube channel, if you guys do have any questions about anything that has been within this video, or just in general, if you have questions, I am somebody who wants to hear these questions. I want to help you guys out in terms of trying to figure out what gaps you have, and I want to fill those gaps as much as possible. So let me know if you have a question about any of these long-term picks, how I'm filtering it out, and so on and so forth. So just, yeah, let me know. I also want to hear if you guys have any suggestions as well as to how I can make this a more engaging, I'm not going to say engaging experience, but something where it's like it'll enhance the experience of your learning. I want to make sure that you guys are learning and you guys are benefiting the most out of these live sessions. So if you have any suggestions or something that you would like to see in potentially part 3, then please do let me know. Oh, this is a first. So WLKP essentially only has 9 years of data. They don't have 10 years of data. And for that, that's not something that we could look into. So I'm going to have to say no data for all of these bad boys. Because, you know, the way I see it, if it doesn't have 10 years of data, it doesn't really give you an overall view of how the company really is in the long term. So instead of actually just saying no data, we're just going to completely cross out WLKP. Not something that we can tolerate within our little... Not something that we could tolerate within our little stock picking over here. So WLKP, it was nice while we had you, but it's over. Alright, this is the last stock that we're going to be looking at. Let's first calculate the EPS. This one, I kind of have a feeling it might look a little better. Let's see. .33. Nah, dude, we got this. We got this. I feel like I'm racing against time right now. 0.07. And last but not least, 0.09. Alright, you got an average growth of about 24.52%. Looks like I had a good intuition about that one. But now let's look at the actual past 4 quarters and the past performance. 0.11, 0.12, 0.10, and 0.12. Been kind of stagnant, so am I going to say that there's growth there? There isn't any growth, but again, there aren't any decreases as well. Sharp increases or decreases. Number 1, number 2, number 3, number 4, and number 5. And otherwise, it's kind of just been going up and down, up and down. But ever since 2013, you can tell that the company's been getting a little profitable. Much more profitable than the past couple of years. And it's kind of been increasing in terms of that nature. So, you know what? That's something we could potentially look into. LOAN. So we'll put a yes for that. Awesome. So I want to kind of show you the watch list as to how that's looking like right now. Just to show you guys what kind of progress we're making over here, right? But first, let me copy and paste this into the correct column so we don't get confused. Alright, we got that. Oi, oi, oi. Sharp decreases or increases. Give me like 2 seconds, I'm almost there. Oh man. Interesting. Cool stuff. Alright, now check this out. Are you guys ready for this updated watch list? Boom. So as you can tell, a majority of the actual stocks that we've looked at so far they've actually been, in terms of decreases. Okay, let me make a note here so that none of us get confused, including myself for part 3. But no equals decrease or increase available. So by me saying no, essentially in this field, I'm saying yeah, there is a sharp decrease or increase, which is something that we cannot tolerate. Saying yes is a good thing because that means that there hasn't been anything of that nature, and it's something that we could potentially look into. But unfortunately, we only had 2 stocks that were looking like that. Kind of sucks, but it is what it is. And let me kind of freeze this too so that when we scroll down, things are a little bit better. Freeze the entire row or freeze the entire column, my dude. Alright. So now it's actually easier when we try to look into this. Dope. Okay, you know what, guys? I'm gonna just end it off right there. If you guys do want to see part 3 or you enjoyed this current live stream, let me know in the comment section down below. Make sure that you're hitting that subscribe button and you're pressing that like button as well. I'll see you guys in part 3 where we'll go through the rest of these different factors. Chances are we'll probably do it on a Monday just to make sure that we're on schedule. I know these past 2 weeks we haven't actually posted an actual video, but it's because I wanted to focus on this live session and creating a watch list, making sure that's our top priority. So chances are next Monday, catch me on part 3. ZCommunity, you guys are awesome. I'll catch you guys on the next live stream. TAMER Azizz signing out. Peace.